just clocked on to 6:30, so I'll do a steady introduction while people are joining, and then we'll get into the webinar tonight, which is the ISA deadline, use it or lose it. So we'll talk through quite a lot of elements. I've got a bit of an agenda put together, and we'll talk through different ways of being able to utilize the ISA this year, strategies for next year, as well as is there a way to preserve your ISA allowance if you're not able to use that as of yet this year. So let's start to go through. So obviously, as with any of our webinars, this is not financial advice. During the webinar, we will share investment opportunities from Source Capital, and these opportunities are for sophisticated and high net worth individuals only. Your capital is at risk and you may lose all that you lend. Peer-to-peer investments are not covered by the Financial Services Compensation Scheme, although legal charges are secured against UK property. Property values may go up or down, and investments are, that's a little type error, investments are illiquid, so they're not liquid. So myself, John Wilson, I've been at Source since 2019 as the Source Capital Investor Relations Director. So I deal with our high net worth and sophisticated investors, talking through different investment opportunities and ways and methods that they can invest. Personally, I've been investing for over a decade, a mix of property, stocks and shares, cryptos, commodities, pretty much every asset class that there is in varying different levels. So today we'll do a quick recap of the previous webinars. We've got a lot of attendees tonight, so I presume a lot of the people have followed the series right the way through. This is the third episode. The first episode was Cash the IFISA. Second one was How to be an ISA millionaire. So we'll run through both of those in a very quick format. We'll look at when the deadline is for the tax year and why does it matter. And what is the ISA allowance? Changes to the 2023-2024 ISA allowance, are there any? How you can combine peer-to-peer investing and tax-free interest. Quick overview of sourced capital. We'll talk about how to maximize your personal allowance and can the 2022-23 allowance be preserved, and how can you invest with sourced capital, and an invitation to our platform. So the ISA series so far was in episode 1, we talked about a comparison between a cash ISA and a IFISA, innovative finance ISA. We looked at the drawbacks of an ISA, we looked at the benefits of an ISA, and obviously with an ISA you are restricted to a £20,000 allowance per annum as a maximum contribution. A lot of people believe that there's a bit of a drawback in terms of the amount of assets that you can invest into. Obviously, you can't invest into direct property ownership, the whole range of stocks and shares, because generally platforms limit what you can invest into, any cryptos, anything like that. But the huge benefits of utilizing an ISA are that all of your returns are completely tax-free. You can transfer ISA from one tax year into another tax year, and you can move that from one provider to another provider. And there are many ways to invest your annual allowance, and we'll talk about an IFISA mainly today, which some of you may have heard of, others may not. For the types of ISAs that there are out there, you've got your cash ISA, you've got your stocks and shares ISA, innovative finance ISA, and lifetime ISA. The limit on all of them is £20,000. However, you are only eligible for the government bonus on a lifetime ISA up to £4,000. The risk level is different depending on the type of investment that you make and also what style of investment within that. So with a cash ISA, it's generally low risk. It'll be covered by the Financial Services Compensation Scheme up to £85,000. The stocks and shares ISAs can be low to high risk depending on the type of investment fund that you use and who's managing that for you. However, it can be quite expensive. You've got an innovative finance ISA, which are medium to high depending on the type of loan and the nature of the security held. And then you've got lifetime ISAs, which can be either a cash or stocks and shares ISA, similar to the risk profiles that I mentioned earlier. The typical returns for the 4 different types, low returns really for a cash ISA, generally looking up to around about 4%, which will be fixed in for at least a couple of years. You've got stocks and shares ISAs, completely variable. It depends on who's managing that for you. It depends on the risk level and risk tolerance. Also, what fees are they taking out the back end if you're managing that yourself? Again, you could be generating extremely high returns or extremely low returns, moving into a negative. We've got an innovative finance ISA. They vary from around about 5 or 6% up to around about 12% for any first charge investing within property. It could be debt or equity-based investment as well. And your lifetime ISA, the same as your cash or your stocks and shares. So all the way through, we'll run a couple of questions just to see what our audience here today have utilized. So I'll put a quick poll up for you and then we'll discuss that. So it's really looking at what type of ISAs that you're currently aware of. If we have a lot of people that select one or the other, we'll talk about the others in a bit more depth. So we've got a good mix so far coming through. Actually, we've got the majority of people are using stocks and shares ISAs, with cash ISAs around about 50% of attendees utilizing those. We've got about 40% of people already using IFISAs, which is great. And then we've got lifetime ISAs with 10% of people utilizing those. It just gives you a bit of a feel for how people usually utilize their ISAs, and it is predominantly in stocks and shares. So we'll delve into what is an IFISA, innovative finance ISA. It's a type of ISA that allows individuals to save or to invest in alternative forms of finance, such as peer-to-peer lending. An IFISA provides a tax wrapper, so all investments made within the tax wrapper into peer-to-peer loans are exempt from any income or capital gains tax because it's through the IFISA wrapper. That's what we talked about on the first episode. The second episode that we went into was becoming an ISA millionaire, a little bit more glamorous than the first one of cash ISAs versus stocks and shares ISAs and IFISAs. So we used some key assumptions when we was talking through becoming a ISA millionaire. We'll look at utilizing regular deposits. We will look at a yearly or 12-monthly compounding of interest. There will be no cash drag. So what I mean by that is the funds will always be churning into one project and into another project. We'll base it on 12% returns per annum, which is what Source Capital offer to investors. There'll be additional funds added every year and no adjustment for any potential losses. And we'll assume that there are no platform fees, which is the same at Source Capital. So the calculation that we ran through, we went through a few different ways to gain that £1 million ISA, but the main one to look at utilizing is starting with a fresh ISA and building that up to £1 million. So we start with 20,000. We're at an amazing time of the year for any ISA contributions because you have this year's ISA, and then within the next 3 weeks you'll have next year's ISA. So we've based this on 20,000 of funds going into 22-23 ISA, and also £20,000 worth of funds going straight into the next ISA. So effectively, you're starting this with 40,000, and you can see how quickly the compound interest effect starts to happen. And you can see how over the time of a 16-year period, your accrued interest, it far outweighs than the total number of deposits. Your total number of deposits is 340,000. The interest that you've accrued over that time period is 740,000, giving you a balance just over the 1.08 million mark. So today we're talking about the ISA deadline, use it or lose it. Is effectively that. The deadline is coming up on the 5th of April. The ISA allowance, for those who don't know, a couple of people in the last poll didn't answer, so it may be that they don't have ISAs as of yet, but the government allowance for any fresh funds added into a ISA within a tax year is £20,000. We was all hoping and expecting after the news of pension contributions being able to be increased by 20,000 that the ISA allowance may have increased on today's budget. However, after seeing the news today, there's been no increase to the allocation for next year, or the allowance for next year. The cap has remained the same since 2017 and 2018, and that is set to remain at least next year as well. So we was all expecting or hoping that it would at least keep up with inflation a little bit and would rise slowly or steadily. Let's hope that in 2024, 2025, that also increases. So how can you maximize your personal allowance? The first way, these aren't rocket science. The first way is to fully utilize the 2022-2023 allowance if you've not already done so. And we'll talk about tips and tricks of being able to do that without being fully invested for a longer duration. The second one is plan ahead. Start to look at utilizing next year's ISA allowance now, because we're 3 weeks away. If you can go into the new tax year and utilize that allowance straight away, you're then able to benefit from the tax saving on the interest for an additional year rather than wait until the back end of the year, if it's possible. So we've talked about an IFISA, how to invest with it. We've talked about the allowance for the year and when that starts and finishes, but we're talking about IFISAs, so we need to understand what peer-to-peer is because that's a main asset class that it will be going into. So peer-to-peer is a lending of direct lending of money to individuals or businesses to other individuals or businesses. Generally, there's a intermediary in the middle, which will be a peer-to-peer platform, which will be a FCA-regulated, HMRC-approved platform, which effectively matchmakes borrowers and investors. So you look at a few key things, components when you're choosing a platform that you wish to invest into. And these are looking at the average term of the investment. Are they long-term investment strategies, 3, 5, 6, 10 years, or are they shorter term, 6 to 18 months? Do you have any control of where your money goes, or does it go into a fund or a bond style investment? Can you diversify your investments? Can you choose to pick 3, 4, 10, 15 different investments, looking at different asset classes, looking at different locations, if it's property developments, looking at different style of developments? Can you conduct your own due diligence on what information does a peer-to-peer platform give to you? Do they share all of the information required for you to complete the due diligence in a healthy manner? Can you check their repayment rate? If they're FCA regulated and HMRC approved, they should be able to show their statistics online, or they are required to show their statistics online. Have a check through them, question them on it. And if you need any further information, they'll also be able to provide that for you. And how can you invest? We're talking about investing through an IFISA. Can you actually do that with a platform that you're looking at? So an overview of sourced capital. Again, we'll keep this quite quick. I know a lot of people that are on the webinar tonight have been through a previous webinar where we've talked about it, but the model was created by Stephen Moss in 2017. It's to create an ecosystem within property, which consists of 4 different brands. We've got the Source franchise, which effectively is a lifeblood of the business. We've got over 190 offices now nationwide. Those offices are property professionals. If they're looking to sell an opportunity, so they've sourced an opportunity and they wish to sell it, they can utilize a Source Properties arm of our business. If they're looking to develop, but they're needing a JV partner, they can do that through Source Developments. We've got over £200 million worth of experience within the company of developments that we've actively been involved in. Or if they're looking for funding themselves, they can come through to Sourced Capital, which is a peer-to-peer platform that we're talking about today. How does it actually work? So first, you've got an investor that chooses a property project that they wish to invest their money into. Money is then lent to borrowers via the Source Capital platform. The borrowers use that money to complete their property projects. Throughout this process, we've released information to our borrowers and to our investors. At the start of a project, you'll see a credit report. Midway through a project, every time the borrower wishes to draw down funds for the development, there'll be a monitoring surveys report. The monitoring surveyor will go to site, they'll review the works that have taken place so far, and then the funds will be released to the borrowers in arrears throughout that build process. The investors then earn interest on the money that they lend. When the property project is complete, or the sale's complete, or the refinance is complete mainly, the borrowers are then repaying the loan to all of the investors involved. And then investors can either reinvest the funds into a new project, they can withdraw the funds back into their bank account. If that's done through an IFISA, you don't pay any income tax or any capital gains tax. If you wish to transfer those funds to another ISA provider, you can do that as well. So that is a structure of peer-to-peer. I've put it all on there so we can see a grasp of how it works. On one side, you've got multiple different investors that are investing different levels of capital into a project. Those funds then are held in a Cash 7 regulated account to be released to the borrower as a loan. Once that loan is live, the security is actioned. That security is a first legal charge over the asset, the house in the middle. There's also a company debenture over the SPV. There's a personal guarantee against the developer and also the borrower's equity that they've put into the project. At that point then, the development takes place. Investors then earn a return. So we offer up to 12% return per annum. And the platform, we take a 5% fee from the borrowers. We don't charge any fees to the investors. A little bit more about what we've talked about so far. So source capital, first legal charge security is the highest ranking level of security that you can have with property. It's a FCA regulated peer-to-peer platform. We have 100% repayment rate to date. The statistics are just listed below. We have up to 12% per annum that we offer to our investors. And to date, as we mentioned on the 100% repayment rate, we have zero losses that is of all capital and expected interest. But to top that off, last year we was the ISA provider of the year at the Peer-to-Peer Finance Awards. So we've got a quote there from Steve Moss, which I'll let you read in your own time. It was a true honour to be recognised in such a powerful industry with a lot of good players out there, and especially being able to be awarded the IFISA Provider of the Year. The majority of our investors like to utilise tax efficient ways to invest, and the IFISA is certainly one of those. So one of the key reasons why we wanted to put this webinar together was, one, to talk about the end of the tax year, and just to make people aware that if they don't use it, they do lose it. But it was to bring another concept to utilising an ISA. Is there a way to preserve your ISA allowance? Because if you go over into the new tax year, you can't use anything from the previous tax year. It's slightly different to pension contributions. However, yes, there is a simple answer. There is a way to preserve the ISA allowance for 22-23 if you're not yet ready to commit to a longer term investment. So the first thing that you want to do is make sure that there's no fixed term for putting your funds into an ISA. So you could have a instant access cash ISA where you're able to transfer out of that cash ISA should you wish, or withdraw without any penalties, or without being locked into a longer fixed term. You could invest into a platform such as a peer-to-peer platform, but not actually invest into a platform. You could invest into a stocks and shares ISA, but not actually invest into the assets if you want to keep your money liquid. And you could utilize what is a IFISA, a flexible IFISA or flexible ISA that kind of ties in really well with the point above, where you can invest into an ISA in this tax year. A few days into the next tax year, you can withdraw those funds. And then that increases your allocation by the amount that you've withdrawn. So if you put 20,000 in today, and then on the 7th, 8th, 9th of April, you want to withdraw those funds back into your bank account, you will then have an allocation to reinvest 40,000, but you need to do that into the same ISA. that you've taken the money from. And that's the same if you've generated or built up an ISA worth £100,000. If you're using a flexible ISA provider, you are able to withdraw that £100,000, provided it's not locked in, reinvest that in the same tax year, that you've withdrawn it, and you won't be penalised, or you won't go over the allocation. So investing with Source Capital via an IFISA, there's a few ways to do it. You can either create a new IFISA, which is a simple process that can be done online when you're going through the registration process. You can create and fund multiple ISAs. So that's one of the biggest myths with ISAs, that you can only invest into one. You can't. You can invest into different breeds of ISA, but what you can't do is invest into a stocks and shares ISA and another stocks and shares ISA within the same tax year. And you are always going to be subject to the 20,000 of fresh funds allowance, unless you utilise a trick that we just mentioned a second ago. The other option is that you can transfer your existing ISA. So just make sure when you're looking at doing a ISA transfer that there aren't any transfer fees from one provider to another. Check to make sure that you are able to transfer in and transfer out as well. Look at the timing of the transfer. Make sure that you're happy with the transfer value before you initiate a transfer from one provider to another. And then there's huge tax benefits with retaining the funds in the ISA wrapper. You don't eat into the allocation, the allowance, and it also means that you can start to compound that interest a lot quicker. If you're moving from one underperforming asset class and you want to move it into potentially a different asset class that may offer different returns or higher returns, that's a huge benefit. As I mentioned, it doesn't count towards your ISA allocation for the year. I've got quite a few new faces, as well as people which have been on all of the webinars before. But if you would like any further information about investing with Source Capital, either this tax year or next tax year, just let me know. I'll be able to send over a little bit more information, a bit of a guide, an IFISA guide, as well as the latest investment opportunities once you've registered on the platform and you have become fully verified as high net worth or sophisticated. Amazing, perfect. Quite a lot of people asking for information. So what I'll do is, after this webinar, I'll send over a couple of bits of information, probably on 2 different emails. So thank you very much. And then I have realised that the QR code doesn't actually take you to where I wanted it to take you to. So if you do wish to invest today, you can do so by looking at sourcecapital.co and registering your account. Within the email that I send over, there will also be a link which will directly take you through to the platform to register that account. So that's it. Have we got any questions? I know we've flown through that at a quick rate. I like to do that when we've got the evening webinars. We are open for a Q&A. If you have got any questions, any queries, just put them into the chat box and we'll start to answer them now for you. Might be a quick night. Looks like I've not got any questions coming through as of yet. I'll leave it on for another minute. If I don't get any further questions, we'll close the webinar and I'll send through the emails for you all. Nothing coming through, so we've spent half an hour there talking about ISAs and what you can do, and a few tips and tricks of how you can save this year's allocation. If you've got any direct questions, my email address is john.wilson@source.co, but I'll send attendees that wanted further information about Source Capital an email within the next couple of minutes. Thank you all very much.